Hello out there and good morning, traders. It is December 11th, 2023. Welcome to the Apteros DMI for today. So, a couple of quick notes here before we get into the recap and all that stuff. I have rolled the ES over to the H contract, H24. But what we're going to be looking at here is what happened on the last day for me of the Z contract. So, this is the recap from December 8th and what happened on that day. So we started our DMI out with a rotational context for scenario one. Scenario one essentially being that we stay between these two areas here, the bullish and bearish zones. We had some news come out here that created some volatility, kind of basically kept us rotational on either extreme. And our more recent rejection was from the lower edge, right? So it came down, popped up, and then went down again, and that was what was happening in the news. And then it just started to come up again there. That's where you start to see these candles start to form here. So even within the scope of the news, even within the scope of the volatility, our area is holding true to what their bias is and what the overall condition was at the time. Now, I'd mentioned that this middle section here was going to be really interesting for us because if we were holding above it, it was going to create more of a bullish skew. If it was holding below, it was going to create more of a bearish skew. And the early bit of volatility kind of kept us rotational, as we said in scenario one. But then we started to hold above it, heading up into our target area there, a possible continuation there for that bullish skew idea. Once we got into that target there, scenario one was kind of complete from the lower edge. From there, it was just kind of monitoring what was happening from the upper edge. So yes, an opportunity to get short here as well, heading into that upper zone. But a lesser opportunity, as we say, because the more and more we go back and forth, the less likely these areas are to hold overall. Now, 3 weeks worth of back and forth grinding, I mean, it's a quality idea to stick with the rotational picture there, but we end up breaking out to the upside and just seeing that move continue to the upside right into our upper target there. Another opportunity to get long off of that condition shift there, right back into the target again. But I had mentioned that this upper neutral zone was going to be extremely important for us to clear out and get over. In that DMI from yesterday, or from last Friday, really, it was a destination, it was a target zone, and we were looking for it to clear out to get any further upside, and it just didn't do that for us during the session. And as the session kind of developed here, we started to get what looked like a pushback down in that rotational context again, so coming back into scenario one. But there was just no real opportunity to get short whenever it came back up into our line in the sand area here. So it was just one of those situations where, yes, we started to shift and get acceptance back into scenario one, but no real opportunity to get short for us, and just continues back up above our line in the sand, which was our scenario two breakout type of scenario, back into that target zone again and holding for the remainder of the session and into the overnight and weekend. All right, so that is our breakdown from our plan yesterday, well, last Friday. And overall, it was one of those situations where we ended up seeing a lot of what we planned and prepped. You know, we had that rotational context kind of nailed into the news. We had the bullish skew kind of defined here with our neutral reference. And then we had our over higher targets clearly defined as well for any of the bullish moves and what was kind of evolving as that market developed throughout the session. Okay, so now taking a look at today, we have some important references to clear out, but we have moved things around a little bit because of the rollover. So this upper line in the sand here, this is kind of the highs that we want to get through and hold above to see any further upside. Of course, our generally bullish skew to this market is still intact right here at our lower line in the sand. So we're going to go over essentially a couple of basic scenarios similar to what we had last Friday as well. So in scenario one, we're going to see some bounce back between these two lines in the sand here. Right now, we're currently coming down from the upper part, from the upper bearish line in the sand here. So that would be kind of what we expect for scenario one. And a lot of back and forth here. You'll notice we don't have a reference in between here, so nothing really for us to help pick up with any kind of continuation or define a skew to the market for today. But essentially, that is scenario one, just kind of holding in between these two areas. Now, in terms of ranking and distilling, our upper line in the sand is not as important as our lower one. So our lower one is really the main line in the sand for today. This upper one is really just what we need to see clear out before we can get on board with any further upside in the ES market. So as we come down here, if that continues to the downside, we'll be monitoring, basically the way to put it this is we'll be monitoring this line in the sand for the pushback and the hold in scenario one, or a breakdown into scenario two where we look for that neutral reference first and then a continuation possible down in the 46.17s. So that's the overall landscape, what we're seeing in our main lines in the sand. Remember, this upper one is more or less a destination area that we have to get through. It is, bearish in nature right now because of the way it is behaving on the upper time frame. So that's what we're paying attention to over there at that upper line in the sand. But if we break out above that, we do have an upper target, a stretch target up here around the 4,700 area with some older value that hasn't quite been tested yet. So it is kind of a lot of open space to the upside currently. If you're a 4-on Nadro trader and you're watching these DMIs, pay attention to your extremes. If this market does break out to the upside, you can use those extremes as target areas and pullbacks in the auction. If you are not a Nadro trader and you're just following the DMIs for now, this is the overall upper target because there really isn't much for us in terms of references up above that are static that we can use as targeting references as well. A lot of the references that we use whenever we're trending or moving are dynamic and they kind of move around. So placing them on a chart here, they will move over the course of the session. So it's kind of hard to predict where they're going to end up during a breakout or something like that occurring. But for now, that particular picture is not on the table. We are still in the what is scenario, which is scenario 1, which for us is a pullback into our main line in the sand here. And that's where we're going to be monitoring for continuation in scenario 1 or a breakdown into scenario 2 with continuation targets down below. And our alternate scenario is if we just essentially break up above this line in the sand here, getting scenario 3 for continuation on the bullish side of things.